All right, well, as I mentioned, investors have momentarily hit the pause button. I guess the bigger question is, after a record run-up for stocks in North America, how will investors feel as we continue to go through earnings season and watch the trade uncertainty unfold? Our next guest is watching those all-time highs, but paying particular attention to the Canadian stock market, which, by the way, has outpaced the S&P 500 so far this year. Colin Stewart is CEO and portfolio manager at JC Clark, and he joins us here in studio. Colin, it's nice to see you.
Good to be here, John.
Listen, we don't have to make too much sense of a sort of a mixed day in trading. It is, mid to late July, but the market has been on quite a run recently. So I think people are always trying to figure out why are people potentially hitting the pause button. What's been your general sense on the markets to start off?
Yeah, I think we have been more positive on the Canadian equity market, simply lower valuations. Canada's been out of favor for a long time. I think, new government in place is doing a lot of the right things, trying to invest in infrastructure, deal with the U.S. trade situation, establish ties with other countries. So, overall, we're more positive on Canadian equities, and that's how we're positioned. But, I am surprised at how strong the U.S. equity market has been. I mean, if we think back to the beginning of the year and where we are now, we have much higher geopolitical risk. Tariff risk was basically non-existent on January 1st and now is very elevated, albeit maybe off its worst levels. Earnings estimates have gone down from Jan 1 to today, and U.S. equity stocks are up, and equity valuations are near an all-time high. So we just think with this August 1st trade deadline coming up, some things to be worried about. I think the companies, the economy has held up relatively well in the U.S., but I think consumers perhaps a bit cautious. Companies maybe not spending on capital projects quite the way they would have if had not been for this tariff risk. And it does appear like there's going to be some kind of baseline tariff, which I think overall is not good for economic growth.
This is a hard question to answer, but what component of that, if any, is factored into the market? It feels like because we had a back and forth, that people perhaps think, despite all the tough talk out of Washington, that U.S. President Donald Trump, at the end of the day, we saw it. There was stock market fear post-Liberation Day. So it almost feels like that's in the back of investors' minds. So what I can't figure out is, with a baseline tariff, how much of that is factored into the stock market?
Yeah, I don't think much. There was no expectation on Jan 1 of a baseline tariff. Now we do have a baseline tariff that could be relatively high of 10, 15, 20%, and stocks are higher. So yes, it's certainly, I think the market takes this not as bad as it could have been in early April, and the market has latched onto that, plus a lot of positive momentum around AI. I think those are the two things driving the U.S. market.
So interestingly, we have a former Bank of Canada governor who is now the prime minister. So I think he's well aware of sort of, reading the charts on where the economy is headed. A lot of people are uncertain about Canada's economic footprint, even though we've shown some resilience. So if you're more constructive on the Canadian equities, how much of that is tied to the economy itself? How much of it is just more, you said earlier, just the valuations for Canadian stocks?
Yeah, I don't say we're super bullish on the Canadian economy. I think it's a combination of more infrastructure spending, a lot more spending on defense, military spending, with Canada and other countries having to bring that NATO target up. I think that's going to drive a lot of investment in different Canadian businesses, and defense and aerospace has been sort of a thematic area for us. We own a number of companies in that space which have been doing well. And I do think this, the valuation, as you highlighted, John, the valuations are significantly lower in Canada, so I just think your margin of safety is much higher, and you're now finally, as you pointed out, starting to see there was this long period of quote-unquote U.S. exceptionalism where every investor was putting money into the U.S. market, and that now, those capital flows seem to be reversing a bit, and we're seeing European markets, the Canadian market actually outperform the U.S. equity market in the last number of months, and we think that trend could continue.
Okay, so when it comes to sector themes in Canada, you already talked about defense and aerospace being one you're watching. Real estate is another, and one company that you wanted to highlight is Dream Unlimited. What is it about the dynamics of the business right now that just make you, fairly constructive on it?
Yeah, I mean, it's a really well-run real estate sort of asset management business run by Michael Cooper, who we think is one of the smartest real estate investors in Canada. They've got a big Western Canadian development business, own a lot of valuable land in Alberta and Saskatchewan. Those economies are doing well, relatively speaking, to other provinces. They've also got a really large now asset management business where they generate significant recurring fees, and they have instead of just selling the land off like they used to, they're now developing their own properties, apartments, for example. They're building up a larger apartment portfolio, other types of rental properties, and that recurring income we think will help to revalue the stock, and it is trading at about a 60% discount to their estimate of net asset value, so very cheap.
And then, when we talk about the health of the Canadian consumer, sometimes that can, lead to ups and downs for businesses that rely on that spending. One area you like is consumer non-cyclical, and one company you wanted to flag is Jameson. So they make vitamins. Yep. So I'm not going to put words in your mouth, but I'm going to assume that there's a little less cyclicality with a vitamin company versus, I don't know, just stuff that catches your eye and you want to spend on.
Absolutely. Okay, I mean, it's a steady business. It's a healthcare-oriented business, and obviously, I think benefiting from this long-term secular trend of, consumers being more aware and investing more in their health and wellness. And Jameson is the dominant brand leader in vitamins in Canada, so they've got really a strong market position here. But I think more interesting is that they made an acquisition in the U.S. of a company called Theory a couple of years ago, and that's growing very rapidly. And they also have a strong position in the Chinese vitamin market, which again is they have a very tiny market share. So even if they can increase their market share to 1 or 2 or 3% in China and the US over the next 5 or 10 years, there's a huge sort of white space for them to grow that business. And, as you highlighted, it's a steady business. If we go into a tougher period in the economy, a lot of uncertainty out there now with tariffs, this business should not be impacted by that. And it's also trading at a reasonably attractive valuation compared to where other, similar companies trade.
And then before I let you go, Pollard Banknote, PBL, is a company you've talked about quite a bit in the past, actually, but I think it's worth talking about because we don't talk too much about it, but I think you would likely describe it as a somewhat recession-resistant business. They are tied to the lottery industry. Just remind us, how long have you been an investor in Pollard at this point?
Probably over 10 years.
Wow.
And the stock's done reasonably well over that period of time, but I think the future is extremely bright. Not only as you highlight, John, the industry has had, they specifically focus on the scratch tickets, not the draw-based games. They're one of sort of 3 leading global players, the largest of which is owned by Brookfield. And this business the industry has had 30 years of growth, even through years like 2008, 5 or 6% growth in scratch ticket demand annually. And so very high barriers to entry, safety, security is a big concern. And they've also got this iLottery business, which is really an online type lottery business that's growing rapidly. And there's a lot of, opportunity for new states, new jurisdictions to approve this iLottery. And Pollard is one of the leaders. We also like management. The stock is very cheap and there's very high insider ownership.